Jefferies' profit plunged in the first quarter as a bump in equities and fixed income trading failed to offset a slump in investment banking. How poorly does this portend for the rest of the sector with earnings on its way? Let's get back to our finance editor, Stefania Bianchi. Stefania, I know a lot of stories for you to keep track of this morning, but let's stick with Jefferies for now. What does this sneak peek at the banking sector earnings tell us?
That's right. As you say, earnings have plunged 42%, so quite a big drop. And really, these results act as a bellwether and as an indication of what could be to come for the rest of the banks in the US. We know that investment banking really took a hit last year. Deal making was down across the world. So really, this is an early indication that this slump in deal making could carry on into this year. And maybe there will be more banks like this that will report a drop in revenue.
Speaking of issues at deal making, I know Goldman is shaking things up, and they've had some bankers exit as well. Tell me what happened, and is this in any way related to this tougher investment banking narrative that banks are facing?
Yeah, that's right. We're hearing from sources that 3 senior tech bankers have recently left Goldman, and it might seem like a small number, but again, these were very senior positions, and again, it's another sign that this drop in deal making is really persisting. Again, Goldman is in the midst of a huge shake-up. Job cuts around one of its biggest job cuts, 3,200 job cuts that are ongoing. It's also shaken up its financing group after merging its investment banking and trading operations last year. So again, it's this sense of uncertainty, sense of this deal-making drought that could continue, and perhaps even more job cuts.